This change to property regulation could crash the market, forcing thousands of investors to sell. Today, we uncover exactly what's going on and, more importantly, how you can take advantage of this policy change. Because if you're looking to buy a home, this could be an absolute game changer. So let's jump in. So what actually is the problem and why is legislation looking to change? Well, you can see that the Tasmanian weekly rental increased by more than 10%, and this isn't just a state issue. This is national, and the data backs this up with CoreLogic saying that residential rents hit record highs as national vacancies plummet. And looking into their data set, we can see exactly what's going on with national dwelling vacancy rates falling 1.2%, capital cities increasing over 3% in the June quarter, and national unit rentals hitting a record double-digit annual growth for the first time, rising 10% over the 12 months to June. And this is affecting everyday people, with one family experiencing a $95 weekly rental increase. And it was a Queensland real estate agency who was accused of exploiting tenants after raising a family's rent almost $100 a week. Neil Jansen had lived in this 4-bedroom property in North Lakes for more than 3 years with his wife and 3 daughters. But last week they were told that their rent was increasing from $435 to $530 a week. And to top it all off, the worst part is they were only given a week's notice as to whether or not they were going to pay the new price. And this is a real life example of what's happening in the market and why this is becoming a tremendous problem. And many are saying that there's a real power imbalance, with owners having too much power and leaving renters high and dry to either lump it or leave it. And a lot of this just comes down to supply and demand. When there's limited supply and high demand, the owners can really do whatever they want. And as we can see here, there's not enough rentals on the market, with there being 3 primary factors contributing to the lower rental supply. The first one is the reduction in household sizes. It means that instead of one family having one property, you might have one family having 2 or 3 or even 4 different properties due to the nature of the family dynamics. The next one is services such as Airbnb eating away at the properties that would be on the long-term rental market, now going into the short-term rental market. And finally, the likely rise in immigration. With only about 36,000 vacant rental homes available across Australia, it represents half the amount that was available at the same time last year. And you can see that is really contributing to the factor of the rental crisis. And if all that wasn't bad enough, Australia is facing a housing supply shortage, with the data clearly showing that between 2025 to 2032 that Australia will find itself 163,000 homes short of expected demand. And this is an average expected deficit of around 20,000 homes each year. So this problem doesn't look like it's going to solve itself anytime soon. Now we understand the full extent of the problem, we can see why this new legislation is being called into place. And the Greens is proposing a plan to freeze rent nationwide for 2 years. And looking at exactly what's being called, the Greens are asking for a national-wide 2-year rental freeze to allow incomes to catch up with surging costs. And they want rental prices to be capped at an increase of 2% every 24 months, saying that rent is absolutely out of control, with in the last 12 months rents soaring 9.1% across all capital cities and 10.8% in regional areas. And they're also proposing an end to a no grounds eviction, which allows landlords to evict tenants without providing a reason once they're out of a fixed term contract. And if these proposed changes pass through legislation, we're going to see a massive change in the market. Let's start off with who this stands to benefit. Well, it goes without saying, it's going to help renters and give them reprieve in probably a time of need. Secondly, it's going to be great for home buyers, particularly first home buyers who have been priced out of the market, because this is going to essentially force a lot of investors to sell their homes. Because let's face it, if rates continue to rise and they're unable to pass on those costs, they're either going to have to front up the cost or sell it. And realistically, it's going to affect investors that have more than 1 or 2 properties. My biggest thing I'd be saying is that we've got to think about the second and third order consequences, because this could be a double-edged sword if it is passed into legislation, because if rental prices do decrease over the next 2 years, then what? Will the owners pass that on? Secondly, I think if it does happen, then the other second and third order consequence is that owners could pass through huge rental hikes before the legislation passes into effect. And then my last concern would be whether or not owners then take their properties out from long-term rentals and put it onto short-term, like Airbnb, which would mean that there'd be less rentals on the market and potentially would see an increase in homelessness. And finally, if you're an investor, there's probably two things you can do to prepare for these potential changes. Firstly, look at a fixed rate so you lock in your repayments for an extended period of time. And secondly, consider an interest-only option. This will allow you to increase your cash flow and helping you build up a little bit of a buffer in the interim. And here at Hunter Galloway, we get home loans approved. So if you live in Australia and looking for a great mortgage broker, we can help. We don't charge a fee for our service and help Australia-wide. So reach out and hit us up at huntergalloway.com.au or call us on 1300 088 065. Thanks for watching, and until next time, I'll catch you then.